So someone asked me a question on Facebook the other day. They said, will the housing market fall? I had an answer, but then I thought to myself, this deserves a more detailed video, and I need to share it with my peeps. So let's find out if the housing market's gonna fall in 2020. Hey everyone, my name is Zach, the Money Nutritionist, and my job is to try and guide you to making healthy money decisions. There is a difference between a healthy decision and a non-healthy decision when it comes to money decisions, because non-healthy decisions, they might taste good, but they're not good for you, like day trading. Eating veggies isn't good, but it's good for you, like buying and holding. If you don't mind taking a minute to crush that like button, I'd really appreciate it. If you have time, go ahead and subscribe as well, because it really goes a long way to helping out the channel and helping me to reach more people. With that said, let's go ahead and dive into the info. If you look around, you can see that the real estate market is still up, which is really surprising given that people have lost their jobs, people are concerned with their jobs, there's low inventory on the market, people don't want to move. So why is real estate still so expensive? Why didn't we see a huge crash like we saw in 2008? It just doesn't make sense. So it's a legit question to ask, and I know tons of people are wondering the same thing. They're wondering, is it a good time to buy? Do I need to wait because is there a flood of foreclosures coming? Should I just buy then? So what should I do? And that's really the question we're trying to answer when we're trying to determine what's going to happen with the real estate market. So let's see if we can determine what's going on now and then use what we know to predict what's going to happen by the end of the year. So right now, we know that there's short supply. There's very low inventory in many markets. And I want to preface a lot of our information on the fact that the info will be different from state to state and market to market. But overall, we're seeing a short supply, we're seeing low inventory, and we're still seeing actually pretty high demand, surprisingly. But the problem is that the low inventory is happening because a lot of sellers are afraid to sell their home, because many sellers are afraid on whether or not they're still going to have a job, and they want things to calm down a little bit before making any big decisions. We also know that new home building has slowed a ton, and that mortgage brokers are swamped right now because interest rates are really low. So for the inventory that does exist, people are flooding to lenders trying to get pre-approval letters so they can go house shopping. So houses are still going extremely fast, and mortgage brokers and lenders are still extremely busy. Again, it depends on what market you're in, but overall, that's what's going on. Now, one thing that has changed a little bit, if you were in a hot market, like here in Charlotte, North Carolina, prices have been skyrocketing for the past few years. But if you look at the numbers now over the past month and what the predictions show for the months to come, they have flatlined, and many markets are doing the same. They aren't necessarily going down a lot, but the prices for houses have stagnated and are staying generally where they're at right now. So this is a good thing for you buyers out there. According to the National Association of Realtors, first-time home buyers accounted for 36% of the purchases in April compared to 32% in 2019. What has declined a little bit are cash-only buyers, so investors are starting to pull back a little bit. If we look at current housing trends, what we're seeing is things are starting to balance out a little bit, so there's going to be some relief when it comes to the cost of houses. There will continue to be some hotspots, as I've already mentioned, like some cities in South Carolina and Phoenix, for example, but sellers really won't expect to have bids over their asking price anymore. When it comes to interest rates, they're at record lows right now. I remember when I bought my house back in 2013, I bought it because I said to myself, rates will never be this low again. Now look at it, rates are like 2 points lower than when I had my mortgage back then. So you never know what's going to happen. I can't imagine them going any lower. And if you look at the Fed, they have stated that they don't foresee any rate hikes up until 2022. So the fear is coming from coronavirus, and the Fed really doesn't want to push interest rates up with the unknowns going on right now. But I don't predict the rates to continue to go down. So based on all that info, if we had to make an assumption, we would probably say that rates are going to stay low and not budge too much from where they are now over the next year or so. Sidebar, it's things like this, which is why I always preach to save your money and prepare for these opportunities, because they don't come but ever so often. The Fed has also said that they're going to keep buying bonds, so this will also keep the interest rates low. If we look at the economy itself, it's predicted that GDP will be down 6.5% for 2020, but will bounce back to be 5% for 2021. Right now, unemployment is also at 13.3% right now, but by year end, we're expected to be at 9.3% unemployment. So overall, none of the top 50 metros saw an increase in inventory this year over last year. When it came to inventory, the worst cities were places in the Northeast like Philadelphia, Baltimore, and Providence, Rhode Island. The biggest price declines were in Detroit, San Antonio, and Seattle, and the biggest increases were LA, Cincinnati, and Pittsburgh. Right now, homes are also selling 13 days slower than they were a year ago. So buyer demand is there. It's just that sellers haven't returned to the market yet. Housing prices have stagnated a little bit, and housing prices won't fall because new construction's really not happening, again, depending on the market you're in, and inventory's still really low. And if you've been watching my videos, we know that inflation is hitting financial assets right now instead of consumer goods. So with all this going on, what we can assume for the rest of 2020 is that rates are going to stay low, inventory is going to stay low, and until we get an answer on how to handle coronavirus, we probably won't see much movement in either prices or inventory well until 2021. The things you want to keep an eye out for is when people start feeling comfortable with moving and relocating, you can start to see the market change a little bit. When inventory starts to increase, prices may start to increase a little bit, and as the inventory starts to build, maybe things will start turning back into a buyer's market. But for now, it's still quite a seller's market. So the smart money decision right now is if you can get a rate that's extremely low and still find a deal, then take the deal. I always recommend that regardless of what's going on in the market. If it's a deal, it's a deal. So I hope this information has helped you. If you have any questions, please let me know. Keep an eye on economic trends. Keep an eye on your specific market because it may be very different from what's going on anywhere else or from the national averages. But I'm here to help, so reach out if you need any questions answered. And with that, I'm Zach, the Money Nutritionist. Don't forget to hit that like button, and I'll see you in the next video. Thanks for watching. Be sure to follow me on Twitter, Instagram, and Facebook to stay updated on the latest. But more importantly, to stay updated on YouTube, press the subscribe button below.